Alright. Well, I tried to nail the end of day, but we didn't stay at the downside test. A little pump there into close, but still closing below gamma max on the weekly. Tonight's data is going to be really interesting to see where things have repositioned with the absolutely insane 3.35% move to the upside today. Um, And so I expect that there's probably still a lot of in the money repositioning that needs to occur. And more support probably needs to be added at spot. But we'll see how much gamma max moves up relative to today's price action. Because we did get a pullback in the earlier part of the day, which is going to have incentivized at least some out of the money call buying. And probably some now out of the money put selling. CPI is going to be tomorrow morning. Analyst estimates are around like 0.3% month over month, 0.2 to 0.3 for core. I think headlines 1 to 0.2. Those may come in a little bit hotter depending on the the durables demand we saw prior to tariffs being implemented. But I think analysts have more than enough padding there that it's probably not going to have a significant impact on markets unless it moves substantially to the upside of where current expectations are. Um, Out here on ES, we broke above the bull signal and tested 58.76 to the upside. Um, Continued support at the bull signal is a good sign of bulls building up some support here. And the next upside test of any real importance is probably around 5,900. Over here on the dollar, we saw yields just continuing to rocket up today, especially the 3 month, which is almost reinverted with the 10 year. And then pretty big moves in the belly of the curve on the 2, the 5, and the 10, with some moves at the top end as well. 20 year getting really close to 5% again, and the 10 year getting very close to 4.5. That's gonna be a lot of pressure on funds that went long bonds just a month ago in order to hedge the correction in the market. Now, some of this is them selling those bonds off, but they're selling those bonds off at a pretty substantial loss. Commodities not doing so well today, but mostly a drop in precious metals. Gold down 3% on the rising dollar. Obviously, a little less dollar risk with a trade deal being worked out with China. Oil up today, 1.43%, settling out just under $62 a barrel. And then anything else really interesting? No. Um, Correlation fell sharply, obviously. Um, Probably one of the strongest drops we've seen since the 90-day tariff pause. Um, Such a steep drop in correlation could lead to MMs getting a little bit overexposed to gamma, but I would say probably a lot of this banking on specifically Nvidia earnings, which is the last of the Mag 7 that has not reported yet. Could be interesting if Nvidia's earnings don't come in where expected, and they should be starting to flatten out a bit. Um, so I think Nvidia earnings will be a pretty interesting inception point. Also, this week is going to see the peak of buybacks. We'll probably see buyback flows peaking this week and then starting to fall off following this week out until the next blackout period starts to begin around June 13th. So for the next After Friday, for the next like 27 days or so, buyback flows should start to recede. And this should be their peak for this quarter between now and Friday. Um, Leverage on the carry trade just absolutely rocketing up with the rise in the dollar, especially. We see leverage moving from 8.35x up to about 8.7x. Forward yield on volatility finally closing out a day negative. A pretty substantial drop in the 10-2-year curve. 3-month correlation continued to fall. Although bond volatility picked up a little bit Friday, probably to see that fall back under 100 today, alongside the drop in 3-month correlation dispersion. The out of the money put demand that came in last Friday clearly got burned, and we should start to see skew rising once again. This is maybe a little interesting, but also probably a factor of repositioning in short puts, is that today is the first day in, I think, a couple of weeks that we have seen correlation between VIX and cash VIX flat day over day. So a 9.4 or 94.62% both Friday and today. If correlation starts to turn around back to the upside, we may get another spike in volatility. So keep an eye on that, especially if a large amount of the sold short puts reposition simultaneously. That could drive an outsized move in volatility briefly till they reposition, but something to keep an eye on. Breadth probably seeing some significant improvements today. NQ up 4%. Dow trailing a bit, but 3.6% on Russell and 2.88 on the Dow. Fed fund futures rapidly pricing out September cuts for September, moving down 5.5 bips to 17.5. So just about 3/4 of a cut by September now being priced in. If inflation rises for the rest of this week, we may see even more rate cuts priced out to the point where we don't see any more rate cuts for 2025 at all. Bear steepener dropped a little, but nothing crazy. Down to 4.7. Out here, we got a break up outside of trend above the Jan low, and a breakout above the November low as well, with basically that entire range acting as a gap now. We're trading into end of day above 58.37, which is the Feb low. So three fairly significant monthly lows, all basically gapped over in the overnight session and then held into close. This puts us above the 200 EMA and on track to push up towards like the early March highs, around like 6,000, which would be probably our next significant upside resistance from here. Definitely worth paying attention to. For now, I mean, anything that doesn't fail the 57.73 or 56.96 level to the downside is probably not a sharp enough rejection to turn this trend around. So if we do get any pullback, especially in the back half of this week, and it holds these levels, that's probably going to be even more bullish into the end of the month. And I think that's about it. Yeah. All right. So thank you guys so much for tuning in. I will see you guys bright and early tomorrow morning. Have a good night. Later.